Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Thursday edition of Benzinga's Pre-Market Prep. Spencer Israel, Dennis Dick is back in the saddle just in time to see Joel depart for Philadelphia for the rest of the week. But that's okay. Today might as well be called Catch Dennis Up Day, because whenever he seems to leave us, whether it's for one day or for a week like he just did, he misses a lot. He misses like the action. He left. He went away last March, right when COVID hit. He missed all that. He leaves last week. He misses all this craziness with China. So we're gonna catch Dennis up about what exactly he missed, because I'm sure he was keeping up a little bit, but I don't know. Maybe he was, maybe he wasn't. We'll find out, Dennis. We got earnings to discuss, obviously. Facebook. I want to talk about this Robinhood IPO today. Two guests today. Peter Tuchman will join us at 8:35. He's usually on at 9, but going to bring him on a few minutes early today. And then I'll be joined by Putnam, the chief economist of the CME Group, to talk about whatever Jerome Powell said or didn't say yesterday, and implications of that. Please drop me a like if you could. I'd appreciate that. Real fast before I throw it to Dennis and ask him to regale us with a tale or two from his time camping with the family. Real quick look at markets. S&P's in the green. NASDAQ slightly down. Russell is up, and we got Dow Jones up. Oil's up. Bitcoin's down. Ethereum is down. There is your summary. Now, Dennis, good morning.
You are getting me at the worst possible time here, too, because I just had earnings stock that I got stuck with, just broke earnings here. So I'm working out of that right now. Okay, and I'm going to be with you 100%. I'm just working one trade here.
Okay.
One trade. I can't help myself. I have to actually make trades right as I'm doing the show here as well now. So
okay,
working out here. I'm going to be with you. Full concentration here in just 1 minute.
Okay, you work out of that in just 1 second. Let me go back to my pro here. And let me just, so again, we got a lot of earnings, as I mentioned. We have Facebook. We're going to talk about that. We're coming through like the back half of the earnings season here, so there isn't too much today with the exception of Amazon after the close. But we've got Facebook. We're going to talk about Ford. We got Qualcomm. We got PayPal. Oh, we got to talk about Lending Club. Do you guys see Lending Club?
Crazy.
Holy cow. What a move for that. We will get to this at some point within the hour, I promise. I think like the biggest surprise in the history of Lending Club, as a public company, I think their entire business may have changed in the last quarter or two. So we'll talk about that as well. We'll take questions from our chat, drop your tickers, and I will do my very, very best to write tickers down as I see them. Somebody left us a super chat comment yesterday, Matt, about support.com. And Matt, I forgot about you until like 9:05, and I'm so sorry. So if you're here today, we can talk support.com because I wrote it down, but then I just forgot to bring it up again. So sorry about that, Matt. So I will do my very best to write down tickers as I see them in the chat and cover them in the last 10 minutes of the show today. Also, we talk about potential catalysts all the time on this show. Everyone put this date on your calendars, August 19th. That's Tesla's AI Day. Okay? We have a new catalyst for Tesla, August 19th. Also, I neglected to mention for the second day in a row, speaking of August, what is 2 days after August 19th? I'm glad you asked. August 21st, the first ever pre-market prep 3-hour educational masterclass. Joel and Dennis for 3 hours on a Saturday, 9 to noon. The link is in the description. Just scroll down. You'll see it. It's right there below the video. Sign up. 3 hours of Joel and Dennis on a Saturday, August 21st. Check it out. Matt Miller, it was you. Okay, Matt Miller, I will not forget about you today. I promise. I promise. Yes, now the tickers are all flying. Okay, I will do
tickers
again.
Are flying.
I know.
Okay, and now I am back with you as well. I've worked out the majority of the position that I just had that I needed to get out of because it was big enough that it was going to impact my day if I didn't work out of it well. So anyways, I sell my stocks just so I can talk to you guys. I'm kind of in a good position here now. So what's up? What's up?
I gotta know, how was your week? You were
it
like,
was good. I mean,
right?
I get the itch. I get like 2-3 days away, and then I'm like, okay, now I'm kind of itchy here. I wouldn't mind making a trade or two. I had my iPad with me, so I could have made a trade, but I stopped myself. I didn't make any trades, although I really wanted to. So I stayed completely pretty much off the grid, but I was looking at the prices. I was looking at a few stocks on my cell phone, checking in 3-4 times a day just to see what the overall market is doing. So you're never completely away, but for the most part, it was good. I mean, that's my first vacation since COVID started. We know, if you listen to the show for the last year and a half, I went away the week before. Basically, we started to have lockdowns. So I didn't even know if I was going to get back, but I got back safely. In this case, I knew I was going to get back. What we did, we just went to Quebec camping. It was great. Mostly outdoor, all outdoor activities because I'm not confident enough to do inside stuff here yet. But the kids were swimming. We went with a couple of friends, so they have their kids. So it was all good. All good until basically the final minute of my trip because we had a trailer and we borrowed my sister-in-law's trailer because she had a nice trailer and she actually lives right in Ottawa, which is right close to where we were camping. So my brother, I guess I call him my brother-in-law, hauled the trailer over and we stayed there all week. So it was good. The trailer was great. But right as we're packing up, I'm all packed up, I'm ready to leave. It was a successful trip. I didn't break anything. I'm locking up the trailer. And the deadbolt's sticking a little bit. And these trailer keys are pretty small. So anyway, I'm just, turning it. I was like, oh, it's sticking. So I give it a little pressure. Don't you know the key snaps off in the deadbolt? And I'm like, are you kidding me? I'm like, the kids are in the car. The entire car is packed. We are literally leaving in 10 seconds. I just broke the key in my sister-in-law's trailer, and it's the only key. So I'm like, that is not good. So luckily, the door was not shut yet. So I didn't lock myself out, but the deadbolt was stuck in the full on position there. So I had to actually go borrow some screwdrivers, take the whole mechanism apart, take out the pin of the deadbolt, and then I just closed the trailer up. So now they can't lock the trailer.
Was this at her house or was this like
this is the trailer. This is at the trailer park, and this is the trailer. Okay. Yeah, this is the trailer's deadbolt that I just snapped the key. Like it was kind of sticking, so I gave it a little extra pressure, and it just snapped. And I'm like, Anyways.
And you weren't near civilization where you could just...
No, well, you kind of are. Like, there's a trailer park, so there was a gentleman in the trailer right next. My wife went over there, and he had a pack of screwdrivers. That was good enough. So I took it all apart. It took me about a half an hour, but I got the pin out of the mechanism. There's no way to get the broken key. I mean, broken key in a lock. Good luck with that. So they'll probably have to either replace the mechanism or call a locksmith. I told them whatever the bill is, I'll pay it. But, you feel bad. You didn't break anything. My wife left the trailer spotless, cleaned the whole thing. All my job was to watch the kids unlock the trailer, and I couldn't do it. Fail. Man. But you know what? Everything else was good. We had a great time.
Good.
Sister-in-law wasn't upset about the deadbolt. She's like, no big deal. She's like, the key, she knew it was sticking. She's like, it could have happened to anybody. She's just saying nice things. Meanwhile, probably only could happen to me, but it is what it is. It was a good week.
I gotta say, a little bit disappointed. You said you were checking the markets 3 times a day. That seems like a lot to me. You couldn't go less than 3. You couldn't go less than 3 times a day.
Oh, normally I'd go 30 to 50. I thought I was really good.
Yeah. Okay. All right. Fine. Anyway, so here's what you missed, Dennis. You missed the Chinese government essentially dropping the hammer on your entire capital market system.
Talk to me about this. I've watched the Chinese stocks implode every day, and I'm like, what is going on? So give me the details. This is Inform Denny morning because I need to be informed on what has happened in this last week because I came in trading last night, and I felt like I was trading naked. I felt like, and not naked shorting, like trading with no information, not knowing what's going on, coming in cold turkey and trying to trade stocks. And it's like, all right, I'm looking at all these charts and China stocks have imploded, but they bounced back yesterday. So please inform me what China has done to, 1, have the ugly week we had last week, but then 2, to bounce back nicely in the last 2 days.
They are it started, or I guess you could say it started with Alibaba, but in the last few days it started with the online education industry, and they basically said, we're going to drop some new regulations on you, saying that you can't take outside capital and all these other things. And the online education industry is basically like, well, I guess we're screwed here. I guess we're screwed now. So TAL, there's a chart. There's EDU. TAL is the other big one. I'll bring that one up. But all these charts look the same. So basically, what it comes down to is the Chinese government saying we want way. This is what I think of my interpretation. We want way more control over all these businesses,
Wow.
and we're gonna enact new regulations on everybody, especially with regards to who can and can't take outside capital, who is and is not allowed to have exclusive licenses. They said, hey, Tencent, you got to give up your exclusive music license. So TME Group got hit on that as well. Basically, it's a total shit show, if I can say that. It's a shit show right now. With everyone sort of running for cover. You can look at the K-Web, which is what I sold a couple weeks ago. I saw several articles just specifically about K-Web and highlighting the move in this one ETF, because all this thing holds is Chinese internet companies, right? So it was a huge move across the board. This morning, or actually it was overnight, you got this report from the Wall Street Journal now that Didi is considering going public and private, and Didi came out and denied it. They denied it. They said it's not true.
So I just starting rumors.
So for a brief moment in time, you thought, okay, maybe there's some light at the end of the tunnel, at least if you're Didi shareholders. But no, Didi's saying not so fast, my friend. So anyway, it's a total mess. It's chaos out there. You got JP Morgan.
Wow.
Had a note. I think JP Morgan had the note out on Tuesday, and they basically called China uninvestable. They called all these stocks uninvestable. You cannot invest in them because you just don't know what's going to happen.
Yeah.
So that's the short of it.
So many thoughts on this. And you can start, and really Didi was kind of the start of this lack of confidence. Obviously, we know they had the IPO. 2 days later, major China investigations. We've seen the stock cut in half ever since then. We know Alibaba, maybe we go back, Baba was really the start of it, because Alibaba was 300 when they stopped the Ant Financial spinoff happening, and since then it's kind of been a disaster as well. You see the implosion here, and you just think, wow, if you ever wanted to buy the dip, man, this is a hell of a dip. Like, go back to the KWEB, and I don't know what they hold in there. I don't actually trade that ETF, but like you said, it's a Chinese internet stocks, but, it gave back its entire rally from COVID. Like the COVID, like when we were back in March of 2020, we were $50. And then it rallied over the course of the next year to over 100. Now we're back down to where we were at $50. You think, wow, these stocks are getting cheap. And I know just from a valuation perspective, Alibaba is cheap. But then you look and you think, okay, well, yeah, it's cheap. But it's so many unknowns. So I agree with JP Morgan to a certain extent, is how can you invest when you don't know what's going to happen next? So, I mean, if all these companies are just allowed to go about their business and do what they want to do, there's a lot of them that are just really cheap here. I mean, look at Baidu. It was $350 back in February. It's $160. That's a 2-for-1 stock split. It cut down 50% here.
Yeah.
JD, which may be best of breed, down significantly as well. $108 at the high, hit $61 just 2 days ago. Now it's a nice snapback rally. But if you're coming in now, I mean, you had a wicked sell-off for 3-4 days while I was away. But now you come in and you look at it, just bounce back $10 from the low. I mean, I'm not buying somebody else's profits. I bought that dip. The dip is just gone immediately in JD. So in Alibaba as well, I mean, we got down to 180, or just under 180. Now we're back up over 200. I think it's honestly a selling opportunity, the bounce from the last 2 days, if I'm just looking at the technicals on the charts. But you can't argue with valuation. I mean, they're cheap. So I don't know. And then you go to the whole Didi story here, and I slept in too much today, one thing, because I actually was long Didi overnight. I bought it last night when I got back because it was starting to perk up, and I was seeing some of these other China stocks take off, and I was like, you know what? This one might actually bounce back too. I was thinking I might be able to get, the 887 up to $10. And lo and behold, I wake up and it's 10.50, and I was like, what happened? Then I read, it was actually 13 this morning if I would have woke up a little bit earlier.
Yep.
But I read all the headlines and they denied it. So I've sold the stock already. My target was 10. Just overnight trade I was going to have for a couple of days. I was hoping it could, continue the momentum. Obviously, Wall Street Journal, you get lucky with some news and you make more than your target. But if I would have woke up about 2 hours earlier, I probably could have got 11 or 12 or, I don't know if it touched 13, but close to it. So I don't know what to say. So I'm out of Didi now, full disclosure, before I started the show.
It got to 13.20.
Yeah, I would have been up a lot of money at 13.20. I sold, I think, 10.32 or something this morning after I woke up and then said they denied it. It was still trading up like 17%. I was like, well, I'll take the 17% if they've denied the rumor. If they wouldn't have denied the rumor, I would have been working. Well, if they wouldn't have denied the rumor, I probably would have been trading up at 12 or 13 still. So why did you deny the rumor? You could have denied it after I sold it. I would have woke up at 6 in the morning. I would have been selling that thing at 12 or 13 on a rumor as well. But I don't know. This is hard because I do have a couple of emerging markets ETF. We know I have a very small position left in Alibaba. I had sold a significant portion of it up at 235, but I kept a little piece. I don't. Part of me wants to go out and buy some of these China stocks if we get another dip. Like, again, today is not the day because we've ripped too high on these in the last 2 days. But if you get a retest of those lows, maybe you try them. I mean, from a valuation perspective, they're attractive, but the risk of, China in itself is the huge unknown.
Yeah. I mean, the ground is fundamentally shifting beneath your feet here. Like it's easy to have a bullish thesis on China. Like, they've got the demographics in their favor.
Yeah.
These are relatively cheap tech stocks, right? These are emerging industries that are only going to get bigger. All that sounds great, but if you don't know that whether the government's going to kneecap them, then what can you do? What is there to do?
That's a great analogy. I mean, we don't know if the government's going to kneecap them. That's the complete truth here, and that's why JP Morgan's cautious. That's why investors are cautious. That's why they're selling first and asking questions later.
Exactly.
I tend to think like we've been arguing the EEM for a long time, and I do have a position in that where, you've been a decade where it's really gone nowhere. And, maybe there's some currency effects in there, but for the most part, the EEM has gone nowhere. And this is a decade in which obviously, U.S. tech stocks have rallied 2, 3, 4 times. Mm-hmm. So they're up significantly more than China. So we've argued for a while, is there a catch-up trade in China? For a while in late 2020 and early 2021, it looked like that was a good call. But now with, the unknown of the Chinese Communist Party here really on what, these companies, and which companies are going to attack next, investors are spooked, and rightfully so. I think, if you're picking out some, but you think, a good company, JD, and that's the one I would be looking at. If I was looking at a company to buy on the dip and retest, I go to JD, which has been best of breed. If I was to get back to 65, maybe you take a shot. I'm not chasing up at 72 here today because now you're getting all that, where we were trading in that range from 70 to 80 forever. You snapped out of it. Now you snapped right back into it. So right now, it's rallied too much. 20% in 2 days is too much of a rally for me to chase. But I get a pullback here, which you probably inevitably will, it seems like, in these China stocks. Maybe you take a flyer on a couple of them, but it's been tough to be an investor in China.
I mentioned this yesterday. I'd be curious to get your thoughts, Dennis. This has provided a really good test case scenario, not even a test case, a real life scenario for how somebody like Cathie Wood and ARK Invest and these active managers can handle like a crisis, because they've been selling every day, but for 2 weeks they're still selling. They are still every day. They're selling more. They can't sell all at once. Obviously, they're so big, but they sell JD every day. They sell BEKE every day. They sell Pinduoduo every day, right? Yeah. BZ, right? It's taken them Tencent. It's taken them weeks to unwind these.
They're so big.
They're so large. I think this is going to be a really interesting. Like, however this shakes out, when we look back and say, oh, wow, it took them 2-3 weeks to unwind themselves.
Well, you don't know if she wants to continue to do that. She's such a dollar cost averager. Like, she is, an average downer, but she's also she just doesn't like to time. She's not a market timer. Cathie Wood is definitely not a market timer. She's a fundamental, growth investor.
Right.
And that's why she goes in small pieces, so she doesn't put it all in at once, get the timing wrong. And even if you have a good call, if your timing is bad, you can get hit. normal investors go in and they go out. And I mean, maybe this is the better way to do it. You've got a fundamental long-term thesis. You average in so that you don't get the timing wrong. But she averages out of the positions too. And obviously it's been tough. I mean, PDD, which is loved for the first half of this year, $212. It hit $77. I mean, they absolutely hate China right now. That's unbelievable. Was that capitulation is the question when I was away? It kind of feels like it was. So that's why I'd be more inclined to buy the dips on these. Now, again, we're never buying rips. At least I'm never buying rips. I'm buying dips. So I'm not buying PDD up $3 here, but it's on the list now where I think you did have capitulation 2 days ago. I think you look at this at $79, $80. I think you get back down to the mid 80s. I think you take a shot on it because I think that was capitulation selling 2 days ago.
Yeah, and I said this yesterday. Somebody is going to make a lot of money buying the dip and getting lucky and calling the bottom and all these things, but that won't be me, and it won't be you either. So, but yeah, that's more luck than skill, if anything. But just like somebody got lucky buying the dip in March of last year, right? You didn't know. You just congratulations.
There's always somebody that gets lucky buying the absolute bottom. Right. I'm not that person. Right. I never buy the absolute bottom, but I'm not an average. I kind of just look for the setups. That's why I always say I like it to capitulate, which we just saw 2 days ago on a lot of these Chinese names, bounce. And then I buy the retest where I know where my out is, and that's how I do it, at least on my swing trades. I mean, when you're doing different types of, short-term trades, which we're going to talk about on August 21st, where I'm, doing different types of arbitrage, I'm doing different types of scalps, I'm doing news trading. That's a completely different animal. It's not to do with technical analysis. But most of my swing trades are based on charts. And I don't like to buy the flush. I don't like to catch the falling knife. I like it to flush, let somebody else be the hero trying to call the bottom because you don't know where it is. I mean, you could have been doing this on PDD at 100 and then it's 90 and then it's 80 on you 2 days later. So I don't like to do that, but I do like to buy the retest. So if we got back down to the low 80s in PDD, that's where I would strike. Now, I mean, new information comes out and maybe it changes your thesis at that time. But as of right now, my thesis would be that we capitulated on all these Chinese names 2 days ago. We've had the dead cat bounce off those lows. And in all likelihood, we'll retest, maybe not all the way down, but they'll give me a shot lower. I don't think we're just blasting off and going to $120 and you're going to miss it all on PDD. I think it'll have some back in and fill in because you have some people who were really hit hard. People who bought this thing at 102 when they thought the low was in, and then it just hammered them in the last 4 days. Yeah. They'll be trying to get their money back. So it's not just straight up easy sledding. And I mean, if it does that, okay, well, you missed it. There's always another trade. There's always another opportunity. Mitch, when I was on vacation, I was looking at all this trading, and he's like, Denny, there's always another opportunity there. So you don't have to have FOMO when you're on vacation. Enjoy your vacation. Come back. There'll be another opportunity. And that's the biggest thing, even for newer investors. Like, I missed this. I can't believe I missed this trade. Yeah. And they'll focus on it for so long. Oh, I missed the low in PDD. It was $78. It's $95. I could have made so much money. You know what? There's always another trade. You miss lots of them. I've been trading for 22 years full time. I miss lots of good trades. There's always another trade. Yep. But right now, I'm putting all these on my watch list. And the lows from July 27th, those are my bogeys. That would be my stop out. So if I can get PDD in the low 80s, I'd probably stop out at the low from the 27th, which is the $77 level.
All right. Yeah. You talk about finding a level to lean on, a level to control your risk at. And
that's what you want. You need something to control your risk. When you are just catching the falling knife, there's nothing to lean on. You don't know. So, I mean, that's a dangerous game. I've lost a lot of money trying to catch the falling knife. It usually doesn't work out for you trying to catch the falling knife.
All right, let's move on away from China for a second. You want to go earnings or do you want to go to Robinhood IPO? Where would you like?
Well, let's talk, because we're going to talk earnings for a long time. Let's talk the Robinhood IPO. Great ticker, by the way.
Okay, yeah, Hood. Going public today, and just
under the hood.
I just saw Ryan Craver tweet that and I saw a few people in our chat tweet mention this as well. They already placed some orders and got filled this morning because Robinhood is allocating like 35% of the float to their own users, which is great. I think so. Anyway, they're selling 55 million shares today, offering price at $38, which was at the low end of the range. The range was at 38 to 42. So whatever. $38 is your IPO price. 55 million shares, so a lot of shares coming into the market today. This is not some low float IPO that's easy to push around. This will be hard to push around. The one thing that I am unclear of, and maybe someone in chat can answer this, if you're on Robinhood and you did get an allocation, what are the rules around a lockup? Are you allowed to sell today? Are you not?
Oh yeah, I would think you're allowed to sell right away because they're not insiders. So I would think you're allowed to sell those shares right away.
Wait, Randy, hold on. Randy says what do you say, Randy? Oh, Randy said he can't. Randy uses Robinhood. He said he can't.
When can he?
So when can you sell? When's the lockup period? He doesn't know. Okay, yeah. So he doesn't know. So after the lockup, he doesn't know when. All right. Anyway, so I don't think you can. Oh yeah.
Usually
30 days. Those, 30 days.
You got to wait 30 days to sell that. So if you got the allocation in Robinhood, you got to wait 30 days to sell it.
Yeah, I mean that makes sense, doesn't it?
Sometimes no, not necessarily, because you're not like an insider. You're not like.
Why would Robinhood want to give you open the floodgates to sellers, right?
So 30 days.
Yeah,
oh man,
that makes sense.
Okay, well let's talk valuation on this thing. Like let's just because everybody's probably excited. First of all, does anybody know if they got? Do you know if you got the allocation already? Like.
Yeah,
Randy's got some shares.
Yes.
Was it easy to get? That's always the question, because when they're easy to get, they're never usually good. I'm sorry to say.
Again, they're allocating a lot of their float to their users, so there's a lot of supply out there. So it seems, I don't know if you can get your entire request, but you can get something. You can get a piece. Is what it seems.
Remember Facebook? Everybody went at the full request, and everybody got it. And what happened was, on the Facebook IPO, for newer traders out there, the thing just died on day 2. And we went from $38 and eventually months later got down to 15. They absolutely crushed in the initial investors there. So I don't know if that's going to be the case here, but when you get your full allocation, it's always buyer beware. If you're allocating, you get a little piece and you're lucky enough to get a little piece and you're excited. But when you get your full allocation, I'm always nervous, because it probably means everybody else got their full allocation, which probably means they're selling to you at a really high price. But
yeah, the valuation is high. Just to
it's going to be.
I'm telling you, the valuation is $32 billion, give or take, right? So that's where the IPO price sets the valuation at. It dwarfs SoFi, which is I think like in the teens. I think SoFi is or lower than that. Where is SoFi right now? Let's find out. Let's go into the pro. I don't even know where SoFi is, even though I own it. SoFi market cap, 16. Okay, so we're talking 2 SoFis today, right, for Robinhood. Yeah. I saw somebody mention SoFi as a sympathy play, maybe, right? It's expensive, no doubt. It's expensive. I did watch the roadshow, the public roadshow, the virtual roadshow that they did last Sunday. A couple interesting charts that they shared. Just look at this. This is a chart showing growth of funded accounts for the whole industry, and then Robinhood is the one on top in green. Okay, in dark green. All right, Look at that. Robinhood added more accounts, almost as many accounts than the entire than existed in 2015. Retail accounts, right?
They're it's an incredible company, really, when you think about the growth that they've experienced. So it's not surprising that investors are going to pay a premium for this company. So the question is, is the premium worth it or not? I haven't sat and actually crunched the numbers, because I have no intention of trading Robinhood on day 1.
Yeah.
So, and again, I was on vacation, so I'll sit down back and crunch the numbers here. I never trade on day 1, because I want some levels. Like I just said, I don't like to catch a falling knife. The stock starts going down. And equally, I don't like to, short a rocket ship, so it starts ripping higher. I'm not going to do that either. I need levels. I need at least one bar. I need a previous day high and a previous day low to even think about coming in and trading it. So I never trade them on day 1. There's a lot of people that love trading this stuff. It's wild and risky. Which is the exact opposite of me.
I'm glad you mentioned Facebook, because this is probably going to be the most anticipated or most interesting IPO since Facebook. Because not just because of the company, but because of the fact that they're at the nexus of retail trading, and there's so many storylines here. There's the regulatory risk, right? Like what if payment for order flow comes under what if there's some new regulations around that? That would
kill the stock.
That would destroy Robinhood. That's how they make their money, right?
Yeah.
There's just so many. There's the whole GameStop AMC craze and how they handled that. There's the government testimonies. There's the fact that they just got the largest FINRA fine ever. There's the fact that Vlad Tenev is not registered with FINRA, which I didn't even know that was a thing that the CEO of a broker dealer had to be registered with FINRA, but I guess they do, and he's not. There's just so many storylines here. Look at this chart from the Roadshow. 40% of their users use the app every day.
That's incredible.
That's insane, right?
They've grown an incredible business. One, you ask a great question with payment for order flow, which is still very much in the front center of the news. You see people talking about it every day. It is how they make their money. And obviously, if there's regulation that's happening there, I mean, it's not impossible that there could be regulation that's happening there. Payment for order flow is not allowed in Canada. It's not allowed in the UK. Is it going to continue to be allowed in the US? I think so. I think there could be just more disclosures. If I was a guessing person, I think the regulation is going to be around disclosure, better disclosures.
Probably.
I don't think that they're going to just ban payment for order flow like they did in the UK, I believe, back in 2012. I don't think that's going to happen, but we don't know, and it is an unknown, and it is a risk to be an investor in Robinhood. If they get by and it's just disclosures, I don't think the stock gets affected whatsoever. If they get by and they limit those payments, they put a cap on those payments, if they outright banned it, the stock would get crushed. So that's a major risk. But, that's still, a long ways from getting any, real, we're not even close to being, any resolve there on that issue. It's going to be in the media for a long time. But that's the risk. The return obviously is, it's a company that's growing. It's done a lot of things right. And, let's see. Let's give it a few days, though. I'm not going to trade on day one.
Yeah. And look at this chart as far as their revenue breakdown or their payment for order flow revenue breakdown, right? Equities versus options versus crypto. Wow. You can see crypto, which is the yellow one. Grow.
That's going to grow. The crypto will grow.
Right.
They're just starting to add. They continue to add.
The question is, do the other two stop growing as much, right? What was last year, perfect storm type situation for.
You look at that payment for order flow and you're just like, wow, though. Like we're talking like 2021. I know the crypto has grown, but it's still 80% of their revenues here.
Yeah. Well, look, 720 million last year. Okay, more than half that in just Q1 of this year, right?
Yeah.
So. Yeah, it's
the crypto is a nice growth engine for them, and I mean that is going to obviously continue to grow because I don't think crypto is going away. I mean yes, we've seen some issues with obviously some of these crypto stocks or some of these cryptocurrencies coming in, but nice rally in Bitcoin, which we haven't talked about there when I was away. Nice rally in Bitcoin off of Amazon rumors. Nice rally in Ethereum. I mean, I don't think the story is over for crypto. I've said that the whole time. I said I wouldn't buy a lot of these little ones. I wouldn't buy Doggy Coin, but I mean, I look at Ethereum, I look at Bitcoin. I have a little piece in both of those because you know what? I don't think the story is going away. So that's still going to be a growth engine for Robinhood. Payment for order flow is the wild card.
Are they going to end up being like Facebook? And like yesterday, Facebook spent a lot of the time on their call like trying to lower expectations for the future because they were like, "Look, guys." Like last year was just the past year and a half have been amazing. Understand that. Does Robinhood now have to come out and say like the same thing? Like, look, guys, the last year and a half, like look at this revenue growth, right? Like this is ridiculous.
This was a perfect environment for Robinhood, which is a great point you're making too. Man, you make good points, Spencer. I go away. You've been taking your wow, you've made some awesome points here this morning, but it's a fantastic point again. I mean, this environment with COVID lockdowns was never. There's people who are out of a job and they're like, oh, let's try this Robinhood thing. Let's try this trading thing out. So, I mean, we're obviously getting towards some normalcy here. I know we got fears that we might go back in the lockdown, but, compared to where we were, COVID is on the back burner in a lot of places here right now. And stuff is reopening. Even from my vacation, I could see it. There was a lot of things reopening, which was nice to see. So, great point you're making here again. Was it as good as it gets? Was this environment for Robinhood as good as it gets? And if you're buying at extreme valuations in an environment where it's as good as it gets, that's never a great recipe either. So I'd just be cautious. Like I said, I haven't done my homework, so I'm not going to comment on whether $38 is cheap or whether it's not cheap. We'll find out. The market will tell us that. But I'm not the person who's going to judge that on day one. I might judge it on day 5. I might judge it on day 50, but I'm not going to judge it on day 1.
Okay, and somebody asked about the timing. I did see Nasdaq said something about 10:10, 10:10 Eastern time. It'll be available for trading at approximately 10:20 a.m. Eastern time. That's from the Nasdaq website. So maybe around 10:10, 10:20 is when the stock could open. We did.
They always say that, and then it ends up being a lot later than that. Let's get Peter on here because he's going to have some comments on this as well.
Yeah, and before I go to Peter real fast, we got a weak GDP print. Can't say that. GDP print just now at 8:30 in case you're wondering. But that's
why we're moving around a little bit here. IWM coming in a little bit there. IWM's been ripping all morning.
Yeah. Let's bring on Peter Tuchman, aka the Einstein of Wall Street, and from Wall Street Global Trading Academy. Peter, good morning.
Morning, guys. How's everybody doing?
We are fired up. We've got Robinhood, we've got China, we've got earnings. We didn't even talk about Facebook yet. We got a GDP. We got the Fed yesterday. Where do you want to go? Well, what's on your radar this morning?
So first of all, I'm actually not at the floor of the stock exchange. So this morning I'm actually going in for shoulder surgery, but I'm really thrilled with you guys. So because it's such an exciting day. I mean, there is so much going on. So where do I want to go? I think I really.
Well, good luck with your shoulder surgery just before we get started there. So
I had three rotator cuffs done about 10 weeks ago.
Whoa.
And a bicep shred, and they redid everything. And now it's turned out that something's gone awry in there, and they got to go back in and refix it. There's sort of an infection or something's going on in the shoulder.
Wow.
All right.
It's
well,
sort
good
of
thing you can trade with one hand, right, on your phone.
The pain in the shoulder. You know me. No, nothing will stop me. I got a forge on here. It's a great thing to focus on because it's what we love to do, all three of us, right?
Yeah. Okay. So
it'll keep us from trading this market.
Exactly. Can't keep you down with one shoulder. So what are you watching here? Are you watching the overall market? You're watching the SPY, the Russell? What?
You know what? I'm kind of fascinated by what's going on with earnings, and I think it's really worth talking about. I think it's also important to talk about the Fed yesterday, and I think it's important to talk about Robinhood and their offer up to all of their clients. It's sort of a mea culpa on how people feel they kind of, that's never happened before, offering up 35% of some stock to the users as part of the IPO. So let's just jump into the market and the earning thing. And I saw a tweet yesterday that talked about that maybe, and I don't know if it was downtown Josh Brown or somebody who just said, you know what, maybe it's time they just stopped giving expectations and guidance going forward on earnings and just let the stuff come out or let the stuff happen, right? Because we are, as we talk about, it's not your grandfather's stock market. This, and also at Wall Street Global Trading Academy, we talk about, and we've been on and talked about it because I know Dennis talks about it in the mornings when these earnings come out. You guys are often talking about trading them in advance. And we're sort of very fearful of trading stocks in anticipation of earnings because like what we saw with Apple, you're seeing this such a crowded trade in so many ways here. And it's so the expect to, look, what we're seeing is companies are blowing out earnings. Look, the valuations are at such crazy levels. And there is no playbook for talking the recovery and the way we actually, what was really hitting me this morning was I was having a flashback to December 2020 when Jamie Dimon came on and said, you know what, they asked him about what do you see expectations on earnings and guidance for JP Morgan going forward. And that was right as the pandemic was in its full swing. And he said, you know what, we can't give guidance, right? They were actually not even able to, in the eyes of what was going on with a global shutdown, on even able to tell anybody, you know what, I don't know what the future is going to look like. So now we're a year and change later, and the bottom line is they've sort of lowered expectations, and the earnings are blowing everything out, and people are underestimating the recovery. We got to understand where we're coming from, right? We just spent a year, and I think people sort of don't want to accept the reality of where we were a year ago, guys. But the world was in a complete economic shutdown, right?
Yeah.
Things came to a halt, right? Production, our lives, travel, anything short of going to the store and getting a thing of paper towels and a bottle of alcohol, nobody doing anything. So to think now where we are and to see where the market is, while we're still having these challenges in so many ways. So there's no question we're underestimating the recovery, because the world is moving. People are out there. I know we're being tossed and turned by this new variant and whatnot, but what was also said yesterday in part of the Fed's discussion was there are clearly health challenges within the new variant, but we are not seeing economic challenges yet attributable to this variant. So while people are sort of being tossed and turned in the narrative of like, are we recovering? Are we not? Are we reopening? Are we not? The bottom line is the world is on its way towards recovery. Companies are starting to, whether they're making money or not, they're starting to churn, they're starting to burn. The business model is starting to work again. Things are starting to get back online. Powell said clearly the inflation story is a transient one, meaning that we're starting to produce, we're starting to work, everything. Commodities are going to be up, they're going to be down, but they're starting to be made and used, right? So that's a fascinating story. We've never seen this before. So to be able to now try and predict this, right, and have expectations about it, I think is irresponsible. Let's just let it happen.
I just turned and asked our news desk, just anecdotally, if they've observed a lot of guidance raises this earnings season, and they were just like, yes, like insane, like an unusually large number of guidance raises this quarter. Maybe as companies come out of, as they get more clarity, right? I don't even know if it's fair to say reopening. I think it's fair to say reopened. I think it's like a past tense thing now. I think we're reopened. Like it happened. It's right. I mean, what isn't open yet? I genuinely don't know. We're in it.
Are we out on cruise ships in bulk? Probably not.
Okay, maybe cruise ships. You got me there.
Casinos packed, maybe at a 50%. You know, is travel up and running? Absolutely. We just saw it like in the what was like July 4th. 2 million people a day were getting on planes. That's pretty close to good, right? I mean, that's pretty close to normal. And so we're talking about these companies are being asked the question, why would a company want to give over expectations and under deliver? That is the worst thing a Wall Street company can do, right? And so if there's any hesitation about, well, we don't really know, why wouldn't we lower expectations and over deliver? And that's what we're seeing. 18% of the companies, there's been an 80+% beat, more than 18% on earnings estimates and revenues. These are big numbers, guys. You know, you're talking about a normal beat would be about 1% of revenues is what I read this morning. And we're seeing some companies beat out by more than 3 to 5%. Those are billions of dollars. The reality of it is, right? So I agree with you, Spencer. We are open, right? And as I said, and the key to that story is we are going through health challenges, but not economic challenges at the moment because relative to the new variant, which is obviously, getting people a little bit itchy in their suit.
So the question now is, if we are reopened and if we are going to stay reopened, they have hit these reopening stocks something fierce. I mean, we have bounced back on a few of the names. I'm looking, just like, an RCL, for instance, a week and a half ago, they had slammed this thing back down to where it was trading, in the middle of the crisis. And, a nice bounce back. It went from $69 just in the last 5-7 trading sessions back up to 80. Some of the airlines, the same story where they were hitting them too. Have they oversold some of these reopening stocks?
You know what? I think it's funny the way the market gets super high focus. It's sort of like ADD in the marketplace. There have been those days, Dennis, where, the narrative within the media space is going to be about the pandemic and fear. And then we're seeing this wild volatility in these names like the RCLs of the world. And then we're seeing like sort of our focus goes somewhere else. And they either go into crypto or they go into the Zoom names, DocuSign names, or they suddenly like the cruise lines again. It's a day-to-day. I mean, look at that kind of volatility you're seeing in a cruise ship name, right? It is so bound to the recovery story and people's perceptions, right? People don't book a cruise a trip for next Monday. They book a cruise ship for September or December, right? And so you know what I'm saying? These are long-term plays. If somebody gets on business travel, well, that's something that may be done in a short-term business level. Vacations are booked in advance. There are things that happen in advance, and then things that happen that are a day-to-day thing. So you're seeing those companies like a cruise line company that is a forward-looking metric, and so you're going to see when that story gets ugly around the variant, where those stocks are going to get hit. And that was, I think, those days, Dennis, where the variant became the story of the day. We saw that. What was it? The sell-off on Monday, right? That Monday was a very short-lived sell-off, right? It was the shortest lived of the sell-offs we've seen for the last couple of months. It was all about that weekend. Look, we had a sell-off, a sell day on Friday. People started talking about that historic story about a sell-off Friday, sell-off Monday. It portends a whole week of sell-off. It started with the state of emergency in Japan and the problems about the obstacles in the Olympics. Europe was down 2%. We opened down 750, went down 950. And those stocks, which were all about the pandemic and the variant, got hit. And then that sell-off literally lasted a day and a half, Dennis. And then we saw the greatest rally we've seen in the longest time, closing out Friday at record highs. So it's just like, why don't we just take the market a day at a time at this point?
It is.
I think these reopening stocks are kind of dangerous. They're volatile. They're people are slinging around big numbers with those, on a day-to-day basis. And it's curious, who are those people? Long-term investors aren't trading it the way, making it go from 69 to 82. Those are traders. And so I think that you see thin volatility. You're seeing moves that are unprecedented.
Peter, can't let you go without getting your thoughts on China here. I'm curious what the mood has been down on the floor, on days you've been there, and just your thoughts on just the situation.
Okay, I think it's a really it's a shameful story in so many ways. Look, I will say that a couple of years ago, we saw on the floor tons of these small, and it caught everyone's attention, these small Chinese educational companies going public, right? And there was one after the other, after the other, after the other. Some of them were educational, some were not. And they were like very inexpensive. They were being priced at $6, $8, $9. And there was a big crowd on the floor. And it was our normal presentation about an IPO, but they were happening, in massive succession. And we were looking at each other going, and they were not acting well. They would open, there was a lot of fanfare, and they did nothing but go down. And we all sort of were staring at each other going, okay, well, we're here for the show, but what's up with these stocks? And so I kind of did a little bit of an investigation. And I'm going like, is it responsible? Are these companies really viable? Right? Are they real? What do they do? And are they really ripe for an IPO? And sort of I kind of dug around into it, and I found out that, look, the IPO process is complicated. We've had talks about it before, and it's a much longer story. But what it takes to actually come to market and do that is a very complicated thing. There's a lot of regulation. There's the roadshow, the investment bank, and all that story. But it turns out that there was this little caveat in the rule that talked about that there were these shell companies that had been established within the IPO space that never actually went to IPO. They had done all the due diligence around getting ready to go public, but never did. And it turned out that somebody, I don't know what regulator or what standard, made it so that these companies were able to sort of plug themselves into this shell company that had done all the logistics to go public. And sort of, it's like a pop-up shop in a way, if you can understand where I'm coming from. It's like, somebody's done all the setup of the store. They've done all they've painted the walls. They've got everything. And all you got to do is show up with your stuff, plug in, and be open for 3 weeks, and you can make some money, right? It was almost like these companies did a pop-up shop on the IPO side. I don't know a lot of depth of that story, but that was the truth. And so then you come to Didi, and I was in Didi. I represented a couple different of our clients in Didi. We saw it go public that day. There was a lot of fanfare. It was the biggest IPO since Alibaba from China, with a huge listing, a huge offering. And we saw it open, a lot of fanfare around it. It seemed like it acted well, and I ended up going down that next day to 14.5. I think it opened at 16.62. Reasonable valuation from where it was, and the next day, and it went down to 14.5. It did rally back that next day, and then all this news started to trickle out. So obviously we've seen it get cut in half virtually since then. And I think it is a bit of a chatter on the floor, because we kind of look at each other and go like, wow, this is, we're watching these stocks, not only Didi, but the whole sector getting eviscerated. And it bodes me to think that it was really irresponsible, first of all, for Didi to go public, right? Whether it was the Chinese government or whatnot, or the company itself to go public in the eyes. The news that's trickled out from China post Didi IPO didn't just show up. This was stuff that had been mulling around for a while. And so I kind of feel like we got it stuck to us in a lot of ways. It was like, let's see. I mean, there obviously is a lot of political stuff going on between the U.S. and China. There have been problems back even in the Trump day about thoughts of delisting Chinese companies, pulling them out of the MSCI and whatnot. Right? The story's been mulling for a while. But what we're seeing didn't just happen. So the fact is that they let some of these companies come to the U.S., get listed in our marketplace, and then come out with all this news and we saw them go after Jack Ma and the story that he with his company too. So the story's been around for a while. The devastation and the devaluation that we've seen in these companies over the last 2 weeks is really unprecedented. The only word I can use is irresponsible on the part of the companies themselves and or the Chinese government.
I think, Peter, most people on this side of the Pacific probably agree with you. But Peter Tuchman, guys, he joins us every Thursday, even on days where he's having shoulder surgery. So drop the like for Peter. The guy is a machine.
I wouldn't miss it for the world.
Wouldn't miss it for the world. Peter Tuchman, thank you so much. Wall Street Global Trading Academy, link in description. Peter, good luck today. Seriously, I mean it. Good luck today.
Thanks, guys. Great to see you.
All right.
Thanks,
A different kind of luck needed in trading versus having surgery. But I wish Peter the best. Dennis, we're not even going to get to Facebook today.
We're 8 minutes left, and we had 250 companies reporting.
Wait, no, I want to go Uber here for a second. Okay, there was a report that SoftBank, speaking of Didi, is selling their Uber shares to cover their Didi stake. Okay, here's Uber this morning, overnight.
This is like selling the winners to finance the losers right here. Classic, scenario. They were a big investor, one of the biggest, if not the biggest investor in Didi, and Didi going straight down, and they're raising up cash. So they're selling their investment, or a lot of their investment in Uber, because of the Didi losses. So, I mean, we're seeing, Uber trade down here. I don't know if we got the pricing on that yet, if you've seen the pricing go by, because that can impact it. But, as of right now, it's down 5% because SoftBank's dumping stock.
Well, it was a report from the FT. So Uber, I haven't looked at Lyft for a while. I know that it's not really involved here, but I'm just curious.
All these stocks, let's just give Uber some perspective too. And you know what? If you really do believe in the reopening trade here's a reopening stock, and Uber is a reopening stock. I know somebody's saying, well, it's a stay-at-home stock too because they got the Uber Eats, but it's also a reopening play.
Yep.
This has come down significantly, $64 at the high. Now you get SoftBank dumping their stock. Are they dumping it at the low? I tend to think so. So this is a stock that I actually would be interested in buying. You're looking at the May low, $43.17. I don't know where the pricing is. I don't like to come out because the pricing's at $40 or something crazy. I don't think it's going to be, though. Maybe it's already out there. I haven't done the homework on it. But I think that 43.17 low in May is a nice bogey area, and you're retesting that here this morning on SoftBank sale, the company. Valuation's never been great. I don't know if I'm sticking in my long-term portfolio, but as a short-term trade here, if you want to buy near the lows, you got a shot here. And I mean, if the reopening trade does fizzle out and we all go back into lockdown and this variant turns out to be something significant, and that's not what I'm saying. I'm saying the ifs, always analyzing risk reward with if-then scenarios. That's the risk. So I don't think that's going to happen, and that's why I'm looking at reopening plays. And here is an Uber, which does have a little bit of the lockdown play with the Uber Eats, but it's mostly reopening. I kind of like it here at $43. So I like Uber today.
Wow.
Yeah, buying the dip.
Okay.
There I am.
Can we talk Nikola for just a second?
I just wrote Uber on my list. I'm not in it yet, but thinking about it.
I did not see that one coming this morning. Okay. Nikola,
I didn't see it coming until I just looked at the chart.
Yeah, Trevor Milton has been indicted on charges that he made false and misleading statements to investors. So there you go.
I don't know what to say about Nikola. I don't know what to say about a lot of these.
You know what? Actually, the whole sector caught a bid the last 2 days on. I guess the infrastructure bill is getting through the pipes in Congress slowly but surely. So the whole sector caught a bid. Yesterday, the day before, or maybe just yesterday. But giving it all back now.
You can buy the dip on this stock if you stop yourself out at the 27th low, which was July 27th, and talking the 1308. So below $13, I would stop myself out. You're getting a retest there. So maybe it holds. And you can't just do it perfectly. I mean, maybe you got to give yourself like 50 cents, like 12.80 or something like that, because it's like, oh, boom, 1308, and then it went down to 13, and you're like, oh, I took it out, I got to get out, and then it bounces and just sold the bottom. So it's never a perfect science, but it's a rough bogey target. There's should be some support at 13. We're still trading above that level here this morning. If you think the buy the dippers are going to come back in on a stock like Uber and Nikola, then maybe that's the case. I got a fruit fly flying around my face. That's why I just did that. But anyways, it's $13.30 here. I don't mind it here. As a trade, got to stop yourself out below 13 though. So risking 30 cents to get a look to see if then, and maybe you wait till after the open, or maybe you come in on the open. I can bring up Nikola actually is a New York Stock Exchange stock, so we can get an opening indication for it. Well, no, they're not open yet. So it will eventually, the designated market maker on the floor is still showing zeros, so they haven't updated it yet, but they will eventually update it. I think 13. Oh, no, actually, sorry. Nikola is not. Nikola is a NASDAQ stock. I don't know what I was thinking. That's why it's zeros. So at 928, you get the opening indication for Nikola. So we'll see what it looks at 928. 925, you start getting the opening, imbalance coming out there. So that'll be a tell for us there too. So more information coming there, but $13, big number for Nikola.
Yeah, hard to emulate Elon Musk. Anyway, all right, let's do Facebook real fast. Facebook earnings last night, EPS blew it away. Of course, we knew that would happen, right? $3.61 versus a $3.02 estimate. Sales, a little over 29 billion versus a $27.8 billion estimate. So they beat both numbers. Again, not a shocker. If you saw what Twitter did and Snapchat and Google, you had a feeling this was going to happen with regards to the expectations. But with regards to the reaction is a whole different story, because I mentioned this earlier. Facebook spent a lot of their call downplaying expectations for the upcoming quarter, saying, look, the growth is just there's no way we can possibly sustain the kind of growth that we just had for the last year. Also, interestingly enough, they did mention the Metaverse a lot, like 20 times during the call.
What the hell is the Metaverse?
Did you see?
Explain to me, and I hear this word all the time, but I know, and I got a kind of a glimpse, but seriously though.
Did you see the movie Ready Player One or read the book?
No.
Okay.
Either.
It is a virtual world.
Okay.
As simply as it can be put, it is a virtual world.
Virtual reality, like
it is
buying houses that are like for 600 grand, so you can put on your car, go through your mansion. I mean, oh my gosh.
If it will help you picture it, think something like The Matrix. If it'll help you picture it.
I actually think I hate the Metaverse.
You don't even know what it is, and he hates it.
I don't even know what it is, but I think I hate it. So, but you know what? I hated NFTs off the bat too, and then I warmed up to it. So maybe I'll warm up to the Metaverse. But holy mackerel, this is just seems crazy. And I guess you're talking about a different generation. Joel and I are older. Maybe we can't appreciate this whole virtual reality, but
you're not that much older.
But I just don't get it. I don't get what the whole purpose to a virtual, like, does your life suck so much that you have to, go into another universe to get relief from your own crappy life?
Sometimes
that's your life then. At least try.
Sometimes I wish I could.
I honestly do not get this Metaverse stuff. And I'm hearing this word everywhere. And obviously, the crypto's linked to it and all this stuff. And, I'm long some Ethereum because, it's the NFT stuff, the play, but I don't get it. I just don't get it. Sorry.
Do you get Facebook stock, though? Do you get that?
I get Facebook stock, and the stock has been cheap on a valuation level for a long time. We know the stock's been growing. This is a classic example to a run-up. You had the classic earnings run-up here, which we talk about extracting that alpha. We're going to talk about that on the 21st as well, but in more details on how we find this alpha ahead of the earnings report. The easy money is made ahead of the reports, and they bought it up 6-7 days ahead of the report, And obviously expectations very high coming in, and they couldn't meet those high expectations. Similar to Apple. I mean, Apple was bought and sold off at that 150 level, like the Rock of Gibraltar in Apple. We kissed right up there again, and we couldn't get through it. And now you're looking at a dreaded double top in Apple. So here, completely talking against my buck. But if I had Apple on for a trade, I'd be selling into rallies here right now. I've got Apple only in the long-term invest portfolio. I've had it in there for a decade. It's not going anywhere. But, I mean, this 150 is a big level for it. So Facebook, same story. Good earnings, everything firing on all cylinders, but it was as good as it gets. And, you know, expectations were just simply too high. And that's why we're down $13 a day. Does it bounce right back? I think you got to look for, these are all trading together. They always have the FAANG stocks, Apple, Amazon. We're going to get Amazon tonight, which is going to help dictate the movement of all these stocks as well. Microsoft sold off a little bit after its report. Four tops, call the four tops on Microsoft at 290. This is big technical resistance. So you look like you have an Apple failure. Microsoft, you look like you could have a failure at 290. So, you know, Amazon still to be determined because we got earnings coming up along all these stocks in the long-term portfolio, by the way. And then you got Facebook, which broke out and made a new all-time high yesterday, and it's coming off too. So right now, FAANG doesn't look as healthy as FAANG did a week ago.
All right. And with regards to the Amazon report and all these big reports, we've been restreaming them on our YouTube channel. So the Facebook earnings call is there, the Apple call is there, the Twitter call, Tesla, all these earnings calls are on our channel. We'll be streaming the Amazon call tonight. I think it's scheduled for 5:30 Eastern time. So check that out if you want to hang and listen to the first earnings call without Jeff Bezos at the helm. Okay, Dennis, it's been great to have you back. I want to get a Blue Putnam
Great to be back
in a second.
I missed you guys. I missed everyone in the chat too. Even the haters. I missed the haters too. I missed everyone.
All the losers and the haters. You missed them.
I missed everyone. I missed the winners. I missed the losers. I missed the haters. I missed the lovers. I missed everyone. So I missed everybody.
We didn't get to all the stocks. We barely got to the chat. We didn't get to PayPal or Lending Club. We will get to
or DKNG. I had all these stocks on my list. I mean, there's so many on my list, and we didn't get to any of them.
Tell you what, we'll be talking about this stuff all day, though, through the rest of our stream. After this, live trading with myself and Mitch and Ryan and Zunaid. So, Dennis, go enjoy the rest of your day. Good luck. I want to bring on Blue Putnam, though, because we did not even talk really about the Fed. And Blue will hopefully provide some clarity as far as what exactly was said, because I'll be honest with you guys, I've never been good. I say this every time. I've never been good at interpreting Fed speak, especially when they can't answer a question with a straight answer. So Blue Putnam, Managing Director, Chief Economist at the CME Group, is joining me now. Blue, good morning. Am I right to feel this frustration, Blue?
Oh, of course. You know, back in the day when Alan Greenspan was running the Fed, he had a famous quote. He said, "If you think I understood what I said, I misspoke." I mean, and that's a tradition at the Federal Reserve, is that they want to be data dependent, they want to be flexible, and so they don't want to draw any lines in the sand. If they give a direction of what they might do next, they don't want to give timing. If they give timing, they don't want to tell you what they want to do, you know?
So, okay. So all that's being said, we know they never really want to show their cards. What cards did they show us yesterday?
Well, they did change their press release to put in an extra word that they're going to wait to do anything until there's a sustained period. They want a long period for the recovery. But in the press conference, Chairman Jay Powell was actually a little more clear about why they're ambiguous right now. And it's because they have a dual mandate: low unemployment and 2% inflation. Okay. They're missing both targets, but in different directions. And that's unusual. And that gives them a conflicted state of mind, because we've got 6 million jobs we have not recovered from the pandemic. You know, we have we've recovered, we lost 21 million jobs. We got 6 million to go. Now, parts of the labor market are strong. You know, restaurants are hiring, they're raising salaries, but those are low paying jobs, and they're going to take a while to come back. And then you look at inflation, the other mandate, we're at 5% inflation. We're well above the target. So the Fed's saying, well, wait a minute, that's just temporary. We can wait a while. But, they got one goal where they're on the wrong end of the target. the unemployment says they should wait. The inflation says they should do something. Your head is in the freezer and your feet are in the oven and you feel fine. No, you don't do anything. That's where we at.
Okay. I guess that's so. They changed one word, and that's the word that we're going to hang our hats on here going forward.
Well, you gotta speak the Fed's language. They have entire lists of words they use. They agonize about this stuff. I mean, I would think it's a waste of time, but that's what they do, and that's what Fed watchers have learned to do.
Well, one thing that was frustrating, or that jumped out to me, was during the press conference, and Steve Leisman asked for what was his question? It was, he asked like for data on how they would quantify recovery, or it wasn't recovery, but anyway, Jerome Powell was like, I'm not going to give you any data on that. I think he was talking about recovery. Did any timelines, change on that front, or how the Fed is thinking about this, or do we have any other insights as far as like where the Fed thinks we're at?
No, there were no real changes. The market slept through the press conference and everything. You really didn't get all that much of a reaction. But, one of the things you really have to remember is that the Fed we're seeing today that's talking about what they're going to do next year isn't the Fed we're going to have next year. Janet Yellen's opening on the Fed hasn't been filled. Biden's going to fill that in the third or fourth quarter. The vice chair for supervision, that's probably going to get changed. Jay Powell may get reappointed. He may not. There's a camp one way or the other. We have a rotation of the regional feds as to who votes and who doesn't. So the people that are going to make the decision next year aren't the ones giving the guidance today. So you're going to be careful,
Okay, I got to ask you, Blue, about the GDP print that we got here this morning for Q2. 6.5% GDP growth. And I saw estimates as high as 8%. Is that right? I'm not sure. Can you interpret this number for us?
Yeah, it's disappointing. You're exactly right. Back 6 weeks, 8 weeks, first quarter, many economists, myself included, were looking for a higher number in the second quarter. I will tell you that this number will probably be revised upward. Nice. They don't have a lot of data on, they get data on retail sales and the trade deficit and things like that after this number is released. So this is what they call an advanced projection. But it's still a little lower. Now, I have to give the Atlanta Fed's model credibility. It was also looking at above 8% numbers of like 6 or 8 weeks ago. And they ratcheted down to this number in the last week. So, that the data has not come in as strong as you might have liked for the month of June. And, you can blame that on the lack of vaccinations. As we've realized that if people don't get vaccinated, more people are going to go to the hospital, some people are going to die, and the economy's not going to recover as fast. So it's all about the pace of vaccinations, and that's slowed down.
Blue, are there any numbers you have on your radar? We got the jobs number next Friday. Any big numbers that you have on your radar here that you're watching especially closely?
Well, I try to stay away from forecasting these monthly numbers because they bounce around.
Not as far as forecasting, but just like numbers that you think are going to be.
No.
Yeah.
The main message I have is that the best numbers of the year are probably in the rearview mirror. Even if that 6.5% was disappointing, the third and fourth quarters are likely to be a little slower because, when you come out of a pandemic, you get a bounce. Okay, we've had a bounce, and that's worth a quarter or two. And then you start to slow down toward the more trend growth rate. Same thing with jobs. The jobs number for June that was released in early July, probably the best number of the year. And then we're gonna still add jobs, but not at a pace, the same pace, because the bounce is over. And so I think we have to come to grips with we're heading toward trend, and trend, for the U.S. is 2.5% GDP. It's just gonna be a slow, long haul to get the last part of this back.
So it's basically just a case of, like you said, a bounce, and like the amplitude just getting getting smaller, right, each time, right, and we just resume a general trend.
Yeah, unless something, of course, disrupts that trend, and what we've learned is that the lack of, there's a large minority of people that have decided not to get vaccinated. That's definitely slowing down the economy, or not making it grow as fast. We're growing, so I didn't say that quite right. But
Okay.
we're growing, but not as fast as we'd like. But we don't know what that will mean. I mean, Fed Chairman Powell held out the hope that that things wouldn't be as bad related to the vaccine as some people were thinking. So he was a little more optimistic about the second half. But he phrased that in your ambiguous terms of it was hope. It was not a forecast.
Yeah. All right, Blue Putnam is managing director and chief economist at the CME Group, and he joins us to break down Fed speak and break down economic numbers periodically. Blue, pleasure to talk as always, sir. Have a good one.
Thank you.
All right, guys. It is 9:10, and a lot we did not cover on the show today, but that's okay because we have other shows that I'm sure we're going to talk about all this stuff on. So coming up next, we got live trading with myself, Ryan Faluna, Zunaid Suleiman, Money Mitch Hotch. We will hang out with you. I think they're going to start in a few minutes here, and we'll just go with you through the open, and that will be a ton of fun. And we're going to have a few guests join us as well. And yeah, we've gotten some great feedback. If you've not watched that, we've been trying to do more of that this week, more just group team-wide hangouts and trading and just doing more of a roundtable type thing. So that's what we'll do next. We, of course, have SPACs Attacks today. We've got the Power Hour. We got Technical. The Crypto Show is back. Biotech Buzz. Zinger Stock Trivia. I have not yet decided, to be honest with you, if I'm going to do an At the Close show because I have no Joel. And Dennis is way too busy at that time. So I'll figure that out, whether what's going on at 3:30. The Benzinga Cannabis Hour is going to be live at 4 o'clock today. After Hours with Ryan Rose Biani at 5. I mentioned again, we're going to be streaming the Amazon earnings call at 5:30. And then Chance Trades at 6 o'clock today. To wrap up the day, we'll do a Benzinga Pro webinar in the evening. Speaking of Benzinga Pro, guys, if you have not checked the platform out, I do recommend you at least try a free 2-week trial. Okay, pro.benzinga.com. Link is up on the screen there. Free 2-week trial. Check it out. That's what this platform is. You've got news feeds, you've got scanners, you've got calendars, you've got chats. You can chat with our news desk right here. You can chat with other people on the platform right there. You've got our Squawk, which is probably my favorite feature on the platform, just in terms of convenience. Like I said, scanners across the board, press releases, news items, the whole 9 yards. Again, free 2-week trial, pro.benzinga.com. If you want more than that, you can get a discount by entering the promo code YouTube20. That's also up there on the screen. YouTube20 will get you 20% off any Benzinga Pro subscription. If you have any more questions about Benzinga Pro, any more questions at all, just email these guys, onboarding@benzinga.com, and they will answer your questions. And if they don't, then tell me, and I'll go bust some kneecaps. All right? But they should. They will. They're great. Okay. That's going to be a wrap for me here. Man, guys, was it great or was it great to have Dennis back? It sucks that Joel can be here as well. But Dennis just took a week off. He hasn't taken a week off in a year and a half. So it was great to have Dennis back. He'll be back tomorrow. And we'll have the whole crew back on Monday for the first time in a week and a half. But yeah, miss Dennis. There was a bunch of things in chat that I saw that I wrote down or made note of that we didn't get to. The big thing that I wanted to get to, we ran out of time, was I wanted to ask him, James, your question about the breadth, market breadth. I saw that at the top of the hour, and I wrote it down, and I will ask. We'll talk more about breadth tomorrow. I think today was a bit of a catch up day for old Denny. So yeah, please keep on dropping those tickers in. I do my very best to write them down, but if you drop something in the chat and we didn't get to it, just hop on over to our very next show, which will be starting here in a few minutes. This stream will redirect to that, and we can just answer your questions there as well. We do our very best to answer as many questions in the chat as we can. So all of that being said, please remember all the information from our show is meant to be used as informational purposes, not for investing or trading advice. Yeah, guys, smash the like button. Where's my phone little graphic? Smash the like button, right? Subscribe to Benzinga on YouTube if you haven't already. We'd appreciate that. Thanks to my guests, Blue. Thanks to Peter. Thanks to all of you. And I will see you guys on the very next show, live trading with Benzinga, starting in a couple of minutes here, right here on Benzinga TV. Stay tuned and stay green.